We're talking silver today, taking an in-depth look at the metal with Mu Lee. She's one of the analysts with CPM Group, the leading New York-based research firm, and she's up next. Mu Lee joins me now from New York. Mu, thanks for being with me.
Pleasure to be here, Daniela.
Mu, as I mentioned, we're talking silver today, and we'll be getting to CPM's forecast for the metal later on in the show. But I'd like to start off by talking about that current spike we're seeing in silver ETF holdings in the month of January. Is this an indication that investors are turning more favorably towards silver?
In terms of the silver ETFs holdings, what we've seen in the past couple of weeks is that investors have been adding to their holdings in the silver ETFs. So in mid-January, there has been a more than 20 million ounce increase in investor silver holdings in the ETFs. And over the past couple of days, there's a bit of sell-off by around 2 million ounces or so. To put this in a bit of background, in 2012, we are seeing net additions in investor holdings in ETFs at around 50 million ounces. And that compares to a 24 million ounces of decline in investor silver holdings in ETFs. So there has been a bit of investor positiveness toward silver and the rest of the precious metals compound, and this also ties in with this bullish sentiment we're seeing in stocks, and all the other risk assets. But let's keep in mind that this is about $620 million in terms of asset allocation. So I would say this is probably a drop of the bucket compared to the capital that has allocated to assets across the board.
Just on that note, Mu, the last reports I saw were indicating that there's a surplus of 207 million ounces of silver. Can you confirm that?
Yeah, we still are in a surplus market in the silver. Investors typically have been absorbing the surplus metal in the silver market, and there is no real shortage of silver metal in this market, but investors are generally interested in silver as a way of diversifying their portfolios. Many of the people that are invested in silver happen to be retail investors because they see the metal as an asset class is relatively low entry, and silver prices have been very volatile. In terms of, if there is a macro economic shift, people tend to buy and sell silver along with all the other asset classes, along with gold and platinum and palladium.
Mu, sticking to the topic of supply and silver, since silver is mined as a byproduct of base metals, does that make supply less tied to demand?
Right. The supply of silver generally are very much tied to the production of lead and zinc and copper. So the prices of lead and zinc and copper has had a great effect on the base metals production and the silver byproduct of these base metals mines. What we have seen in the past couple of years is that primary silver mines have accounted for a growing percentage of the total silver mine supplies, up from less than 20% a few years ago to right now roughly a quarter of the silver mine production. And in addition, silver prices have risen over the past couple of years, and that also just stimulates some mine development. Mine development of base metals that has silver byproducts. So in a way, the supply of the silver has been increasingly tied to the price movements.
Mu, last week the big news came out that the U.S. Mint was temporarily suspending their sales of their silver eagle coins. They plan to resume the selling of these coins at the end of January. But are there any supply issues associated with the suspension of the Mint silver coin sales?
As far as I understand, there has been a temporary spike in demand during the fourth quarter of last year. So I think this is tied to a lot of chatters about the fiscal cliff, and investor concerns really have risen at the end of last year. You can see this in the silver coin sales data from the Mint. In November in particular, the monthly sales of silver coins was more than double than the previous November of 2011. So and at that period of time, this surge in demand, I think, was pretty much unanticipated by the Mint, and there were some strains in the supply of the silver blanks. And as a result, some of that demand gets carried over in 2012. And in January, I think we're probably going to see all-time highs of roughly 7 million ounces of Mint silver coin sales. Just to keep this in mind, January is typically a time where you see seasonally high silver coin sales. And overall, silver coin sales in 2012 was down about 15% to around 34 million ounces.
Mu, you mentioned January is a popular time for silver coins. Why is that?
I think it has to do with the way dealers have been making purchases in the Mint silver coins, and then they would sell it to the secondary market. It's a seasonal thing.
Mu, you mentioned the fiscal cliff. How do you think the ongoing budgetary talks might affect silver?
Well, I think now that the congressional agreement about a tax overhaul has already been reached, a lot of the worsened concern has been behind the market. Of course, there always will be hypes about what's going on in Washington. There's still talks going on about the debt ceiling. And my thoughts are that this time the markets probably wouldn't necessarily take this as drastically as it did in August 2011, although there still are concerns about a possible credit downgrade by the rating agencies. And so I think at some point people need to look at all the economic fiscal problems in the U.S. and say these problems have been around for decades. Especially since 2008, we've seen these problems getting worse. There has been a lot of concerns in the market, but the worst predictions about what's going to happen hasn't yet happened. And I would argue that in the event that the apocalypse does come around and the fiscal issues implode, the economy goes down in the toilet, I don't see any reason why silver wouldn't tank as it did in 2008. Because if the real economy is affected by these fiscal issues, we're likely to see industrial use of silver decline, and that would be very damaging to the silver prices.
Okay, Mu, let's take a look now at some demand fundamentals CPM Group sees for silver in 2013.
So for the demand fundamentals in silver, we are seeing at this point that silver fabrication demand is likely to have risen about 1.2% over the year, and this is significantly lower growth compared to what we've seen in 2011 and 2010. And a lot of the demand sectors in silver has been affected by the slower growth in China and also some weakness in economic conditions in developed economies such as the U.S. and Europe. So, in terms of the specific demand sectors, what we're seeing is the demand from the solar panels, which used to be an area where you see very strong growth in server demand, has slipped down by about 25% or 40 million ounces last year because there were aggressive thrifting in the solar panel industry. But going into this year, we think that there are technical constraints as to how much silver we can thrift out of the solar panels. So demand from the sector is likely to stabilize.
So Mu, I know CPM's coming out with their coveted silver yearbook in May. What forecast is your firm looking at for silver this year?
Right. So silver prices, let me just go over what happened to silver prices in the past, because in 2012, what we're seeing is some less than volatility in silver prices. So the silver price range was between 26 and 36, 37 in 2012 compared to the price range of 26 to 50, around $50 in 2011. So we have seen right now, pretty much since October, silver prices have seen support at around $28, and the resistance level seems to be at 36. And what we're seeing next year is prices are likely to be strong going until March, but then later on in the third quarter there could be a bit of price downward correction, and intraday prices may drop to as low as $24. And overall, we could see prices average at around $28 for the year.
Mu, thanks so much for talking silver with me today.
See you soon, Daniela.
And thanks for watching this edition of Commodities Confidential. You can email me any comments or questions at newsfeedback@kitco.com or tweet me at Daniela Cambone. Thanks for watching.